Hello, we are going to discuss audit risks and types of audit risks. First is a definition of audit risks. Audit risks is a risk that auditor will give inappropriate audit opinion that it is known by everyone. Basically, it is that risk that auditor is going to give a wrong opinion. Audit risks is basically the function of risks of material misstatement and detection risks. Risks of material misstatement are of two types: inherent risks and control risks. So we are going to discuss one by one. The first is your inherent risks. Inherent risks is basically that risk which is independent of the company internal control. Your inherent risk does not talks about internal control. It is independent. Inherent risk is basically your nature of business and external factors. So for example, rapid technological changes, your company dealing with complex financial instruments, company dealing with complex transactions like acquisition, mergers, highly regulated companies. In that case, your inherent risk is very high. Basically, you have to understand one thing: in inherent risk does not consider internal control. It is talks about without consideration of internal control. That is basically the inherent risks. You can see the definition. I have give you examples. Second is control risks. Control risks is like the inherent risk is independent of company internal control, but control risk is dependent on the effectiveness of the company internal control. Control risk is basically that risk that material misstatement will not be prevented, detected, and corrected by the company internal control. That risk that control has failed to prevent, detect, and correct your error and fraud. For example, the same person is approving the transactions also, and the same person is recording the transactions also. Here you can say inadequate segregation of duties. That is basically the control risks. This is basically the control risks. Basically talks about your internal controls. And last one is detection risks. Detection risk is that risk. For example, detection risk is that auditor failed to perform his audit procedures. For if the inherent risks and control risks is high, then obviously auditor is going to perform more audit procedures, because of which your detection risks will become low. And if the inherent risks and control risks are very low, that means your auditor is going. And if your inherent risks and control risks are low, that really means your auditor is going to perform less audit procedures, because of which your detection risks will be high. So there is an inverse relationship between inherent risks, control risks, and detection risks that you have to understand. Okay.